Hey, welcome to the weekly update. We have a short week in trading here this week, but full of information. My name is Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue. Hope everybody had a good Memorial weekend. It was nice and sunny here in Seattle, so hopefully you were able to get outside and enjoy the weather and kind of remember those who have fought for our freedom. We're going to jump right in. This week, again, was a short week because we were closed, obviously, on Monday for Memorial Day. But after that, begin the drama. We have got a lot going on. So let's start with just yesterday, and it's only been 2 days as we're in Thursday. Or I'm sorry, 3 days. But yesterday on Wednesday, basically the Fed had announced that they plan to begin to sell some of their corporate bond holdings. So this is not the government debt, the federal government debt, which they are still planning to buy about 120 billion a month. Although they've talked about slowing that down, that is not what I'm referring to here yet. That is still in the works, I think. However, they plan to sell, I think they have about 13 billion, somewhere right around there, of corporate bonds that they had bought in form of ETFs and in the form of individual securities. And they plan to work on slowly selling that off. I think they said by the end of the year. So it's not a huge amount given the market, but it is important to understand. And I think, again, for those who listen to us every week, you will know very well that anytime this type of news comes out, my opinion, and this is based on what they've done in the past, is that this may be kind of like a little lift under the hood of what may be to come. So I don't have the crystal ball here, but just based on what the Fed has done in the past, they like to kind of signal where they're going. And this is probably a very less significant way of signaling some of these changes maybe in the future as we start to deal with all the inflation worries we've all heard about lately, and also obviously the frothiness, I guess, of things right now. So pay attention as the Fed comes. They'll talk. It's not next week. It's the 15th of June. So we got a couple weeks until they chat, but that will be important to really pay attention to. And then today we had initial jobless claims come out below 400,000 again. And the big number, ADP employment report, came out with a huge number at about 978,000 jobs added. I think we're expecting somewhere just shy of 700. So it was a big surprise. And for those who follow the stock market, kind of brushed off. The market was basically flat. The NASDAQ was down, depending on which indice you were looking at, but basically flat. It actually started pretty low, and then a little ways into the day, Biden actually announced that instead of changing the corporate tax rate, instead of increasing it, that they may impose a floor instead to kind of help get some of these tax packages through. And I think that that's really what we started to see the market shake off some of those downturn. Again, it didn't end up positive, but like the Dow was flat, the NASDAQ was down, I think about 0.7%, somewhere right around there. So it was interesting to see that kind of take off when he had shared that. And then going all the way back to last week on Friday, there was a lot of information there too. So Friday we had personal income, which was down about 13%, consumer spending up just barely, and the big number, we saw core inflation up 0.7%. Even slightly higher than expectations, which were already high. So for those who know, again, we've been kind of pounding the table on inflation for a while. And although the numbers are starting to show it, it's really starting to kind of play its way through. So really pay attention to these inflation numbers as we move forward. Tomorrow is the big day though. So get ready. Tomorrow is the non-farm payroll, and they're expecting a giant number of over 1.25 million new jobs. Jobs added, excuse me. So that will be really important. And, maybe depending on how that shapes up, may kind of dictate what happens next. And then also the Fed chair is talking about climate change. So it's not necessarily tied to the interest rates and all this stuff, but, if there is any signaling to be done, it's possible he'll be talking about that as well. So I think that wraps it up for this week. I do want to jump into the question of the week, which really is more of an event-driven question. We've had a lot of people going through a lot of job changes. We actually had a podcast recently where we talked about it, and soon we'll have a blog post kind of sharing some of the considerations with a job transition. But given all this COVID stuff, a lot of people going back to work, a lot of people switching jobs, trying to find the next career, whatever it may be, this is definitely a hot topic right now. And so we wanted to kind of talk a little bit about what to consider when you make this job transition. And the first, of course, is to look at new group benefits, right? We want to make sure that we're taking advantage of whatever is going on. Typically you'll see the medical, dental, life, health, those types of things. But also look into the more like fringe benefits. You may want to find out if you have legal benefits available, long-term care, some of those types of things. Also want to look at the 401k choices. When you leave a company, you may be able to leave the 401k where it was. You may be able to roll it into a new employer plan, or you may be able to roll it into an IRA. And there's kind of pros and cons to each, but some generally a 401k may have a little more limited choices. IRA may open yourself up to the world of options, but that can be daunting or a positive depending on your experience and whether or not you maybe have somebody that helps you with that. But you also want to take a look at your previous life insurance benefits. Some companies may allow you to continue those, so that might be something to pay attention to as well in case you're maybe of poor health and needs that type of benefit to be continued. And of course, if you are moving, we're in Seattle, so I have to talk about this, into some sort of tech position, almost always there's some form of equity compensation. So just understanding the ins and outs of that equity compensation plan and how to maybe use that, given the tax benefits involved with whatever plan is available and how it fits into the bigger picture. So those are generally some of the biggest things to pay attention to as you make that job transition. As we get this out, we will have a blog post on our website here soon with that information and a little more detail behind each of these. But very, very timely, I thought, and very good question of the week. So we'll kind of leave it at that, but we really look forward to seeing you guys next week, same place. We'll have a lot for you as we kind of digest some of the ADP numbers, ADP employment numbers, non-farm payroll numbers as we wrap up the week and then get into next week. There's a few things to kind of touch on as well. So hopefully that's helpful. If you have any questions for us, please email us, info@mainsailfg.com. Have a great day, and we will see you next Thursday.